smokers, this ain't no joke, as I just watched a stock price go down 40% in a matter of 40 minutes, a percent a minute, okay? This stock here today is called Home Stock, ticker symbol home, okay? This stock is down over 40%. And I watched it drop that much literally in a matter of 40 minutes, okay? We're gonna go ahead and look at the numbers here around this stock. We're gonna talk about if there's value to be had in the stock, the risk reward profile with a stock like this. And if you remember right, this is a stock I was in for a very short amount of time, and then I ended up doing a video. Basically, I sold out of all my shares. This was very interesting, okay? By the way, if you're wondering why I sold out of all my shares, you don't have to go back and watch that video. Essentially, the main reason was the balance sheet. I just couldn't deal with the balance sheet. The balance sheet on this stock was so bad, and that was the main overwhelming reason. And I was just like, I can't be in this stock because the balance sheet was so bad. And so I sold it all, did a video about it. And then it got real interesting after I sold out of this stock, okay? Keep in mind, I sold out of the stock probably a little under $6 a share. I think it was like high fives, okay? And as soon as I sell out of this stock, somebody shoots a pistol in the air and they say, oh, okay, who's gonna win to Mars first? Is it gonna be Elon Musk or is it gonna be Home Stock Price? And literally Home Stock Price almost got to Mars first. Like literally in such a short amount of time. The next thing you know, the stock was like trading around $10 a share. In a matter of about a month or two after I had sold out, it was unbelievable. It was unbelievable how fast the stock shot up after I sold out, okay? And a lot of people were asking me, oh my gosh, you must be frustrated, because literally I could have made tens of thousands of dollars profit in this stock based upon what I had in the stock and based upon how much it went out. And I remember like being in the Discord chat and people were asking me all the time about Home Stock, and oh man, and everybody was posting their screenshots because a lot of people had bought into Home Stock and a lot of people had made a lot of money, and they were like showing, oh, I cashed out with, made a $500 profit, $6,000 profit. I remember there was one guy in there that made, I think, somewhere around $50,000 to $75,000 on Home Stock. So it was awesome. I enjoyed it for everybody. Everybody made money on Home Stock except for me, I think. But it's all good. And whenever you make a fundamental decision with the stock like that, you just have to deal with it, for better or for worse. Whatever happens with that stock price after you sell out is whatever happens, okay? Sometimes you're gonna sell out and the stock's gonna go up a ton more. It is what happens. I made a fundamental decision around selling out of that stock. I didn't like the balance sheet. It was too bad for me to feel comfortable holding that stock, and I sold out, okay? And by the way, here today, now after hours, the stock's trading at like low fives, so technically it's actually quite a bit below where I sold out my shares. So now if you look back net, I mean, obviously it was a good decision because I sold at a much higher price than where the shares are trading at right now, okay? Now let's go ahead and look at these numbers Home reported here after hours and see if this stock really deserves to be down this much. And let's talk about a little bit of risk reward profile with a stock like this, okay? By the way, if you enjoyed this video, make sure you guys smash that thumbs up button and leave a comment down there on what your opinion is on Home Stock. Home earnings for the home decor retailers fiscal third quarter of 2020 are devastating Home Stock in after hours trading on Tuesday. In Investor Place, get things together, okay? It is Wednesday today. It is not Tuesday, Investor Place, okay? This is despite it reporting flat EPS for the quarter, which is better than Wall Street's negative 2-cent estimate. Revenue came in at $318 million, which is also above what analysts were expecting, which was around $314 million. So revenue you look at there and it looks really good. I mean, revenue looks up 19.29%. You're like, man, why would a stock fall like this? Well, a lot of it's just because they opened up more stores, okay? It's not because the older stores are performing well or something like that. It's just because they're opening a bunch more stores. That's how they got that revenue growth, okay? Operating income came in at just under $2 million, which is nearly a 90% drop year over year. The at-home earnings report also sees a company move from a net profit in fiscal Q3 2019 to a net loss in the current quarter. How did the CEO spin this, okay? He says, we delivered our 23rd straight quarter of at least high teens revenue growth and exceeded our profit guidance, driven by strong productivity of our new stores and outperformance in our fall and Halloween assortment. The numbers don't say that, okay? okay, Mr. CEO Lee Bird, okay? The numbers flat out don't say that your fall and Halloween assortment did good. And based upon the profit loss numbers, it doesn't look like you have very strong productivity, to be completely honest, okay? We're also pleased that our disciplined effort to improve our inventory position has been highly effective. I can make an argument that that's not so good either. We'll look at the balance sheet in just a minute. Now, in terms of the big issue with At Home, it had to do with their guidance. And this is the main reason why the stock is falling off a cliff right now, okay? The problem in the At Home earnings report comes in with its lowered guidance from fiscal 2020. The company now expects adjusted earnings per share to range between 51 cents to 56 cents and revenue to come in at 1.35 billion to 1.36 billion. That is dramatically down from what Wall Street was expecting. They were expecting about 68 cents, okay? Pretty close in the revenue numbers, but the EPS dramatic difference. I'm talking, a midpoint there is about 54 cents as far as what the company expects, and Wall Street was expecting 68 cents. So that's really, really bad. I mean, that's a dramatic downtake there in 2020 numbers expected. And I mean, the profit for this company is just being eroded and eroded. And this is one of the reasons that the stock has gone down so much recently. I mean, if you look at a one-year chart of the stock, it's absolutely like one of the worst one-year charts you're going to find of many public companies. And a lot of investors are just saying like the profit continues to go down. Management doesn't seem to have a grip on this. But there's even more of a worrisome thing here in some of these numbers that I don't think a lot of people are paying attention to, okay? And if you look at comp store sales, which is essentially if you have a store open for at least a year, is it doing more business or less business than the same time last year? And the fact is, comp store sales decreased 2% year over year in its most recent quarter. That's an extremely bad sign, and that is definitely a sign that the business is not being run well, okay? Flat out. However the CEO wants to spin things here and say they had, successful fall assortment and Halloween assortment, it doesn't show that in the numbers, Lee Bird. Your same store sales just fell 2% year over year. So flat out, whatever they're not getting enough customers in the store, and whatever customers they are getting in the store, they're not spending enough money, okay? So that's just like whatever, however they want to spin it. Just look at the numbers, down 2% year over year. That means your stores are doing less business than the same quarter last year. Bad sign for any physical retailer. Bad sign for any restaurant play whenever you see them having less business in their old stores, especially in an economic environment. That's completely fine. They're US based. US economy is fine. Many other businesses are flourishing right now. And obviously At Home is not. Now, the main issue I always had with the stock, and the main reason I sold out of the stock, was around the balance sheet, okay? And if we take a peek at the balance sheet here, it's improved a little bit since I sold out, okay? So now they're up to a little over $14 million in cash now at this point in time. But keep in mind, they still have $335 million in long-term debt, okay? So they still have a massive load of debt. They do have a little more cash than they had before. So that is a slight improvement, and I like to see that, but it's still, not a very big number, okay? It's not a very big number, and I'll tell you just a minute why a lot of investors should definitely be worried about that, and why it is definitely a risky stock to be involved with. I'll explain that in just a moment. But also, you look at inventories. Inventories now up to 431 million, okay, versus 349, and they did increase how many stores they have. So obviously, the more stores you have, the more inventory you need. But at the same time, if I just go to my local At Home, I'm just seeing they have too much inventory in a lot of these stores. It's just piled up to the sky, and it's too much inventory in my opinion. They need to cut down on inventory dramatically, in my personal opinion, in 2020. They're keeping way too much inventory in their stores in 2020, and too much inventory in a physical retail store can lead it to end up looking messy over time, and you never want customers to come in your store and walk through your store and it to feel like a messy environment, okay? But once again, here's the main issue, and here's why the risk reward is not as attractive as one might seem, okay? Essentially, you're looking at a company with 14 million cash, 335 million in long-term debt, okay? The main issue with this is, okay, right now it's not an issue, right? Because technically the company will still make a profit on a yearly basis, and next year they'll probably make a profit on a yearly basis. So it doesn't look like this is an issue right now. As long as you can keep making profits, everything's fine and dandy, okay? But whenever we do have the next recession, this is gonna be a major problem. And the reason this will be a major problem is all of a sudden what ends up happening in a recession scenario? Likely a company like At Home will start taking losses, okay? Will start taking losses in the short term. When they start taking losses in the short term, they're gonna run through that amount of that $14 million or whatever in cash in a matter of a snap of fingers, okay? Run through that real quick. Then you have to load up on a bunch more debt, okay? And if you're in a recession and you're loading up on more debt, one, it's not even guaranteed you'll get the funding, okay? So if you don't get the funding, you go bankrupt. But let's say you do get the bankrupt. If it's in a recession scenario, likely you're gonna have to pay a higher interest rate than you would have in a different situation, in a better economic environment, because, you know, the banks just don't wanna loan as much money, or individuals don't wanna loan as much money, and that's just the way it is. So a stock like this could end up start losing money, then get a ton more debt on their balance sheet, and maybe not such favorable interest rates, or they maybe can't even get a loan in general, and they just go bankrupt, okay? So they're running the business way too tight right now, in my personal opinion, way too tight. They're not the only ones doing this, okay? And I see this from another retailer out there that's been a super hot stock, and their stock is RH, okay? RH, the good thing for RH is they do cater to the high end of the market, which the high end of the market, even if there is a recession, they're not as much of a group that would have to pull back on spending or things like that, because like if you have like $50 million before a recession, you still have like 25 million after a recession, like you're still super rich and you can still afford like new furniture at RH, which is what they cater to the high end of the market. But I see the same thing with RH, a lot of debt on their balance sheet, and they run the business so tight, and you have these type of retailers running their business so tight right now that, man, whenever a recession does happen, and we don't know when the next one is, but whenever it does happen, these are a lot of business models that could end up going bankrupt or end up having to load up on a lot more bad debt. And so when I look at home stock, it you know, excites me from the perspective of, you know, if they could get this business to grow again in terms of comp store sales, and if they could get the profit to go back up, I mean, this could be a stock that you could see a 2x, 3x, maybe even 4x in the stock price. But the risk on the other side is, man, this is a potential bankruptcy candidate if they started actually losing money, because they don't have much cash to go through a tough time with this business model. So, or they just have to take out a ton more debt, and then they load up that balance sheet, all of a sudden, next thing you know, they got $450 million in debt, $500 million in debt. With a company of this size, that's a massive, massive debt load that you have to pay that interest on, and that interest just keeps compounding, those numbers keep getting bigger. So when I look at home, it's tempting at $5 a share, but the balance sheet, I just can't touch it because of that balance sheet, guys. So, you know, respect if you want to buy it, you know, tomorrow at $5 a share or whatever. Personally, I just can't do it because that balance sheet is just, it's so bad. It's so bad. They run the business way too tight. In my opinion, I worry a lot if the economy was to go down, how big of the losses they would start taking, and, you know, what that would do for the business model. So anyways, let me know your opinion on At Home in that comment section. Don't forget to smash the thumbs up button if you enjoyed today's video. As always, thank you for watching. Have a great day.